We are back at it again here with another video with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all the subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. It helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the S&P 500 index, and we're going to talk about what keeps on pulling it down, how the 10-year Treasury is looking, what this means for growth, the overall markets, and where could we be heading based off the charts and all the indications here with 42 vision on the one-day chart and everything going on moving forward. But before we jump into it, I want to share with you guys the home run opportunity of the week. From last week to this week, we have a weekly watch list every single week, as well as opportunities daily. I'm going to share those with you guys, and if you are interested in joining, check out the link down below in the description, and we look forward to having you join us. Let's go ahead and jump into that, and we're going to talk about what is going on with the S&P 500 index in the overall markets. So today I'm going to share with you guys the home run of the week. I know I always talk about the home run of the day. We talk about daily opportunities, but also there's a weekly watch list, so there is room for all types of traders. Whether you're a day trader, swing trader, there's an opportunity for you. And if this is something that interests you, you're more than welcome to join us. The link is down below in the description to the Discord, and by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the opportunities I mentioned this morning: FBIO and JZXN. After them falling downwards, right, and pulling down towards their lows and bouncing back up, it took patience. They did give realistic expectation balances of 5 to 10%, 10 to 15%. But let's talk about the home run of the week. This is a stock that we started watching last week, and you're getting a sneak peek of another one on that list, which was VALE. This one pulled back last week to a bottom and bounced back up nearly 15% within the same week, and now it's hit new all-time lows since I mentioned it, creating an opportunity for the long term, right? But here is one that we talked about last week, and that is FAMI, and you can see here on the chart it was actually pulling downwards, sitting at 22 cents at its all-time low of the 52-week low that we've seen in the last year. Now, when we go ahead and look at the chart, it continued to sit within those areas, right? And you could see it here, and it hit lows of 19 cents last week towards the end of the week. And going into this week, there has been a reversal, and this is 42 vision, right? You can see the weakness, you can see the dip, and you can see the transition into strength. And right now, today, it hit a high of 36 cents, nearly reaching 100% plus opportunity. This was a home run so far at 36 cents of about 70% plus in just a few days, guys. These are the opportunities you can become part of, and as well as you can gain access to this indicator 42 vision by joining the 42 vision tier level. Check out the link down below, and we look forward to having you join us. Let's jump into these charts. So the S&P 500 index had pulled back drastically back here on September 20th and the 21st, and then it started to rebound, and now it's going back down. And this is how you know you're in a correction: when things start to pull back, they start to pull back up, and then there's that rejection again, creating that downward trend. And when you get that downward trend, you end up in a correction, okay? Now, the way this could end up turning into a crash is if it breaks through a specific level, which we're going to talk about here in the charts. But if this is going to continue in correction mode, the next point of reference would be down here at 4,200, and then we would be talking about all the way down here at $4,000. So that would be the beginning and middle, right, per se, of a full correction, from way up here down to here, and the middle, because it's getting closer to a crash. If this was to turn into a crash, it would be way down here at 3,700 and even 3,600 mark. So think about that. That's a big way down here. So we are nowhere near a crash. We are in the middle of a correction. And could this turn into a crash? That's the big question everybody wants to know. And the best way to answer it is if we have all these catalysts that are negative continuing to be a concern, it could possibly happen, right? But no one's really seen a crash. Everyone's more focused on a possible correction. We're in the middle of it, and it may continue. So what is it that makes this such a possible crash to even happen. The first thing is, a lot of people are expecting earnings to slow down, right? We have had some amazing earnings beats, and that is something that is going to be difficult moving forward. But after we get through that, it might create that correction or crash. It gets priced into the markets, and then we start to continue to go in that upward trajectory, because that's what it's done year after year after year, right? Every single time there's a correction or a crash, it is a setup for the next bull run. I always say that, and this is the midst of a correction or crash, whatever it turns into, which we're far from a crash, but in the midst of it, we are in a setup for the next bull run right now, and that's exactly what we're seeing here. And this is where opportunities begin. I always say this in the group over at the Patreon and Discord. I state it all the time when we're seeing corrections or pullbacks, because they're setups for bull runs. This is not where investing is supposed to stop. This is where it's supposed to begin. So I want investors to be aware of that. This is where the opportunities are formed. When you're starting to invest, when things are going upwards, sometimes you're already late, or you're catching things where you're not able to maximize on the opportunity. This is where the maximizing opportunities begin. And what I love about 42 Vision, which is the indicator you have access to now as well by joining the 42 Vision tier level, is that it shows me the transition, right? This is how I knew that we were going into a correction and we were going into a downward trend. When this transition happened here, pulled down this way, this transition looked like it was going back up. It didn't fully transition to dark green, which is the piece that was missing, this one right here, this candlestick, and it continued to pull right back down. And this is how I'm able to see through all this volatility how things are playing out right now for the stock market, and how there's emotions and psychology behind these movements. And with 42 Vision, I'm able to block it all out, and I can see clearly what is going on. So we went back into red here. So if this is going to continue pulling downwards drastically, the next shift would be a few more reds and then a white candlestick with red borders, meaning that things are getting extremely into oversold area and further weakness. But what is it that drives the whole entire growth sector down? What is it that's driving the S&P 500 down beyond just earnings, the psychology in the charts and the technicals? Well, the first thing is the 10-year Treasury is spiking up really, really fast. If you notice, there was an inflection point in June and July when things were going downwards towards August, and the whole entire stock market was pushing upwards during that time. Okay, had a pullback back in May, and then it just had its small corrections and just continued going higher every single time. And if you go back to these dates, around that time, the 10-year Treasury had its small spikes, but it was nothing. It was just a moment, and things continued. Right now, it's not just a moment. It's been spiking up for nearly almost 2 months now. And if this continues, it's going to continue to hurt growth, and it's going to continue to hurt the overall markets all around, right? But this is where opportunities are formed, because back in May and April and March, when things went up pretty high, what happened with growth? It was going downwards, and everyone was concerned at the time with growth stocks. And a lot of those stocks, I caught them in April and May as they were going downwards. Some of them even near their 52-week lows when I mentioned them on the weekly watch list. And a lot of them have come back up 50% plus, all the way up towards 100 to 200% at their highest points. One of them was ChargePoint. We caught it in the 20s, went up to $38. Then another one was Skills. We caught that one at 12, ran up to 24. We caught a Firm back in the 40s and went above 100. We caught Clove right before it ran up to 28 in June, right there in May at around $7. And I mean, I can name a bunch of them. And this is where this going up right now is creating opportunities all over again. The thing is, when do those opportunities start? And that is why it is so important to be patient and be aware that this is where investing begins. It's not supposed to stop. If you just wait for the reversal, no one can really time the market, but you don't want to catch a falling knife either. And this is why 42 Vision has helped me a lot to be able to see things based off of weakness and strength when reversals are happening to the downside and to the upside. And that's what I'm watching for now. But that is one of the main things hurting the overall markets in a lot of portfolios, because a lot of people have growth stocks in their portfolios. So if you have growth stocks, that is why they are red. Okay, a lot of them are red. Now, some of them are being right now pushed up higher beyond what we expected in the short term because there's a lot of risk on being taken overall in those small niches, but not everywhere. So that's why a lot of them are red and some are green. But the overall sector of growth is getting hit hard because of that. This is the true reason, okay? A lot of people are saying Evergrande. A lot of people are saying, fears of chip shortages, bottleneck constraints in the supply chain issues overall. And those are all true things. But the main thing is right here, the inflation concerns, which a lot of people are saying it's getting out of hand eventually, and also debt ceiling debate, okay? And a lot of people are ignoring the tapering that is coming. It's already been announced, and that is something that we need to see how the overall market goes ahead and adjust to this tapering, okay? Like to actually take off the training wheels from the bike and ride the bike without it, and they can balance themselves, right? The stock market needs to actually ride this bike without training wheels. So that is a big deal. And then the debt ceiling debate. This debate is big because, yes, we go through this every year and they're making a big deal about it. But if they hold it back just a little bit or create just any uncertainty and it hasn't been solved, it's going to create continuing further downtrend, okay? And I believe it can also push this up even higher or have it kind of stagnate. And then all of a sudden, once it figures out where it wants to go, it might push up even higher than we expected. And it's going to take a moment for it to cool off, if it's even going to cool off, because this is moving up due to the fact that tapering is coming up. So everyone's kind of not really focusing on the tapering. They're ignoring it as much as they can because they don't want to make the stock market or just every investor be aware that, this is taking off the training wheels. And we're going to have to see if you can handle this. And if you can't, it's going to get a little shaky and then you'll get used to it, right? And that is something that we need to go through in the stock market overall, and investors have to experience in the next following weeks until it happens, or if it's getting priced in now. But mainly it's the debt ceiling debate, the inflation concerns that everyone's aware of, and this is moving up pretty fast, and some people will tie this up with inflation as well, and interest rates possibly going higher. I look forward to seeing your thoughts down below, how you feel about this. Do you think we're going into a full-on crash down to 3,600, or do you think we're going to just a correction? I look forward to seeing those thoughts. As always, guys, thank you guys so much for watching, and let's make some money.